Something just snapped in the market, and no, it was not a crash. TIRX moved plus 186.14%, while Dow Jones finished down 1.61%. That's the kind of tape where someone with size is making a statement. Tonight we answer one question: real trend extension or a very expensive fake-out? In 10 minutes, we decode breadth, expose who actually got paid and punished, and map the events that could flip this tomorrow. Okay, speed round. 1 minute, no fluff. S&P 500 down 1.22% to 6825.43. Breadth stayed supportive instead of relying on one mega-cap pocket. That was real heat, not harmless intraday noise. Nasdaq 100 down 1.52% to 24631.33. AI-sensitive growth stayed in demand while valuation pressure eased. That was real heat, not harmless intraday noise. Dow Jones down 1.61% to 48827.77. Cyclical participation confirmed risk appetite beyond software and semis. That was real heat, not harmless intraday noise. DXY sat at 97.64, up 0.30%. No dollar tantrum, no forced risk dump. USD JPY printed 154.61, up 0.17%. Higher levels pointed to persistent carry demand tied to US-Japan rate differentials. EU Algir USD printed 1.1. Story of the day starts with a fake-looking rally that didn't fade. Traders came in expecting digestion after recent highs, and instead the tape kept finding buyers. Setup: Nasdaq climbed 1.52%, and TIRX ripped 86.14%. That's not defensive hiding, that's capital chasing growth with conviction. Conflict: everyone knows this only works while rates behave. US 10-year moved down 1.59% to 4.03. If yields had jumped hard, this would have cracked. Confirmation: S&P added 1.22%, and Dow added 1.61%. For once, not just 5 megacaps doing all the lifting, and volatility cooperated. VIX at 21.51, up 12.68%. That's the market saying, panic later. Insight: money paid up for evidence and clipped names with uncertainty, which is exactly why GOSS got hit. Implication: this regime is tradable but fragile. If breadth stays broad, dips get bought. If leadership narrows back to a tiny click, the party gets awkward fast. First trigger: tomorrow. 2. Feb 24. Home Depot. Q4 FY 2025 earnings call, 9 a.m. ET, plus State of the Union address, 9 p.m. ET. Morning retail guidance and evening policy messaging can both move U.S. macro sentiment, especially around consumption and trade expectations. Second trigger, then WED, Feb 25. Lowe's Q4 FY 2025 earnings call, 9 a.m. ET, plus NVIDIA and Salesforce results after close, calls at 5 p.m. ET. Home improvement demand signals and mega-cap tech software guidance can reset near-term equity leadership and volatility. Winners and losers time. This is where you see who's actually putting money where their mouth is. TIRX rose 86.14% to 0.08 because investing. Translation: buyers paid for proof, not vibes. SGN rose 58.27% to 0.82 because shares ranked near the top of the day's U. Translation: buyers paid for proof, not vibes. Ezra rose 41.42% to 0.26 because the stock posted a large percentage move with heavy volume in the U. Translation: buyers paid for proof, not vibes. GOSS fell 81.21% to 0.40 because the name led the investing. Translation: the market pulled funding from stories with execution risk. XTKG fell 21.83% to 0.06 because the stock remained among the session's most significant decliners on the U. Translation: the market pulled funding from stories with execution risk. BAT fell 41.50% to 0.07 because Blue Hat appeared in the top loser cohort with a deep percentage drawdown, consistent with high volatility, micro-cap risk unwinds. Translation: the market pulled funding from stories with execution risk. Pattern check: Winners had earnings visibility. Forward look. Here's the part that can ruin a perfectly good thesis. Tomorrow. Pressure point. 2. Feb 24. Home Depot. Q4 or FY 2025 earnings call, 9:00 a.m. ET. Plus, State of the Union address, 9:00 p.m. ET. Morning retail guidance and evening policy messaging can both move U.S. macro sentiment, especially around consumption and trade expectations. Then watch this. WED Feb 25, Lowe's Q4 FY 2025 earnings call, 9:00 a.m. ET, plus NVIDIA and Salesforce results after close, calls at 5:00 p.m. ET. Home improvement demand signals and mega-cap tech software guidance can reset near-term equity leadership and volatility into weekend positioning. After that, into next week. Thu, Feb 26, BLS release. Quarterly data series on business employment dynamics for Q2 2025, 10:00 a.m. ET. Labor market dynamics and business formation trends can influence cyclical growth expectations and the rates equity narrative for late-week trading. Bull case if the tape behaves, tariff rhetoric cools, earnings execution from large-cap reporters is solid, and volatility mean reverts lower as dip buying returns. Base case, related news, but with signal. No headline soup. AP. Trump raised the temporary global tariff rate to 15% after the Supreme Court struck down the prior emergency tariff framework. The tariff shift renewed policy uncertainty and kept risk assets under pressure through the U.S. session. Markets treated the change as a sign that trade policy path risk remains high even after the court ruling. Tariff uncertainty feeds directly into growth, inflation, and margin expectations, which can compress equity multiples and increase cross-asset hedging demand. Meanwhile, this policy path feeds straight into yields, then valuation multiples, then growth leadership. AP. AI competition anxiety hit software leaders while investors prepared for NVIDIA earnings later this week. AP highlighted sharp single-name declines in software tied to concerns about AI-driven competitive disruption. The move added to broader tech volatility and reinforced catalyst sensitivity ahead of major AI earnings. When AI winners, losers are repriced quickly, index-level volatility can rise even if macro data are unchanged, increasing dispersion risk for short-horizon positioning. While everyone watches tech, softer and synthesis, plain English. Today's rally worked because breadth held while rates stayed civil. The market paid for evidence-backed growth and fined execution risk, so stock picking beat blind beta. If I had to bet right now, I'd lean with leadership that still has earnings air cover, hedge where estimate risk is rising, and size around the event calendar instead of candle FOMO. Earliest warning sign is simple. Leadership narrows while indices still look fine. That usually breaks late longs first. Base playbook. Headline-driven swings continue, but markets stay two-sided with high dispersion across sectors and single names around earnings and policy updates. Before we wrap, one stat genuinely reframes how durable this move might be. Process beats prediction. Define invalidation first, then let new data up. Okay, this stat genuinely caught me off guard. Surprise closer, implied volatility rose much faster than the headline index decline. VIX closed at 21.51, 0.68%, while the U.S. 10Y yield fell about 6.5 BPs, 4.096%, 4.031%. Cross-asset hedging demand can accelerate faster than cash index moves when policy uncertainty dominates the tape. That's not just trivia. It reframes today as a participation story, not just an index-level headline. If participation holds, pullbacks are likely orderly. If it cracks first, treat strength as fragile. Pin this stat to tomorrow. If this saved you 30 minutes of chart staring, hit like and subscribe. Drop a comment with the one event you want covered before tomorrow's open. Market Pulse daily lands every market day. See you in the next one.